Bitcoin miner Riot Blockchain names its head of corporate operations as new CFO. Current CFO Jeff McGonigal, something like that, will retire and move into a new role as senior advisor of the miner in mid-August. I don't know how relevant this is, but it is a big mining company, so I like to keep track of it. One of the largest publicly traded Bitcoin miners, Riot Blockchain, appointed Colin Yee, its current head of corporate and financial operations, as the new chief financial officer, effective August 15th. Quote, "We are pleased that Riot's current operational momentum will continue unabated as Colin Yee steps in as our new CFO to help the company achieve and exceed its strategic goals," end quote, said Jason Les, CEO of Riot, in a prepared statement. The change in CFO comes as the shares of the miner have fallen about 72% this year, in line with its peers Core Scientific and Marathon Digital. The Bitcoin mining industry has been rocked by Bitcoin's declining price since November. On May 10th, Riot reported its first quarter earnings. Revenue missed estimates, but the miner maintained its hash rate guidance of 12.8 exahash per second. The current CFO, Jeff McGonigal, will retire from that position to become a senior advisor to Riot as of August 15th, according to a statement. McGonigal is expected to remain employed by Riot through the terms of his employment agreement ending February 7th of next year. To ensure a smooth transition, after that, he is expected to enter into a consulting agreement with the miner. Yee, who is a chartered professional accountant, CPA, joined Riot as head of corporate and financial operations in April. Prior to Riot, he was the chief operating officer and CFO of a family office with controlling interest in companies focused on construction and geothermal systems, according to the statement. On March 23rd, Riot's former chief operating officer, Megan Brooks Anderson, exited her position after 1 year at the company. So they're obviously changing over hands over and over. The good news here is it does sound like Yee has the experience specifically as a CPA, as well as, of course, experience within geothermal systems, I think, and construction. I think from that perspective, he probably is a better fit for running that company from the CFO perspective. Probably a smart move as far as all of that is concerned. Now, there's an opinion article here. I want to go over it and get you all's thoughts on it from CoinDesk that says how to make money from the crypto backlash. It says, welcome to the hype, disappointment, devastation, education, conviction, hype cycle. So all of this is, like I said, this is a repeat. This is just history repeating itself within the cryptocurrency market. It just appears to repeat itself a lot quicker than other markets. And seems to do so, of course, surrounding that traditional Bitcoin super cycle, which is based on the halving of Bitcoin. And the halving of Bitcoin is a reduction of the newly minted Bitcoin that is paid out to miners for solving blocks. In the wake of a more than 50% price drawdown in major cryptocurrencies and the collapse of some huge financial experiments, public sentiment on crypto has done a predictable 180-degree turn. It happens every few years. A crypto price bubble draws in a new wave of speculators. Many of them get burned after making bad bets on technology they don't fully understand, and sentiment swings hard the other way. We've gone from the era of Davey Day Trader doing cute things with Dogecoin to surgeons in Massachusetts losing their life savings on Luna. True, blue chip tech stocks like Meta and Netflix have lost nearly as much as Bitcoin in dollar terms over the last year, but we'll set that to the side. The crypto backlash is here, and it's taking extremely familiar forms. Jackson Palmer, who initially created Dogecoin as a performance art critique of crypto, is making a new round of skeptical declarations. Molly White, founder of the anti-crypto blog Web3 is Going Just Great, is getting profiled in the Washington Post. The skeptical Crypto Critics Corner is suddenly one of the top technology podcasts in the world. And good for all of those largely constructive and incisive critics. Having a healthy presence of informed critical voices is a plus, not a minus for any serious emerging tech sector. But the broader backlash is going to produce much more worrisome nonsense, including its own set of evasions and misrepresentations. Chelsea Manning provided a sterling example in an interview published Tuesday in which she did an awkward crab walk around the word cryptocurrency when describing her work for a project called NIM. Manning described herself as a crypto skeptic and attempted to explain how her project that uses a blockchain to supposedly preserve privacy isn't part of that industry. But NIM has a token which incentivizes network maintainers, and look, folks, it's a cryptocurrency. Chelsea Manning is helping start a cryptocurrency, and that's actually fine. Manning is a champion of privacy and democracy, a person we should all look up to for a few reasons, and it's heartbreaking she feels the need to do this crypto skeptic kabuki. I don't even know that word. I gotta look that one up. While taking checks from a crypto startup. The idea behind the NIM project also seems debatable. If you're trying to protect citizens from government surveillance, a blockchain is maybe not the place to start. Sorry. Getting crypto shamed by a renowned privacy advocate pitching an iffy token project, that's the very definition of down bad. And the wave of smug skeptics is not going to slow down anytime soon, partly because this crash has clearly found its villain and fall guy in the form of Do Kwon, whose $68 billion Luna Terra USD stablecoin paired imploded in early April like a pair of retracting testicles. Jesus, this guy's going hard in the paint. I say both villain and fall guy because he'll be remembered not because he triggered the broader market crash, he maybe kind of did, but because he and his work embodied all the worst excuses of various screw-ups, improvisers, hype beasts, and charlatans who made the crash possible. In previous years, that dunk tanker might have been Mark Karpeles of Mt. Gox or Harold Cotton of Quadrica CX. But this time, after crypto reached levels of public exposure it has never seen before, it's Do Kwon. He's going to be all over TV for months, having such a living embodiment of egotism, venality, recklessness, and stupidity. Standing in for crypto as a whole is going to make things measurably worse for the industry. And you should absolutely be mad at him about this in addition to everything else. I don't know about that. Why would you blame it all on a single actor? Part of this, like I said, is like cyclical. This is a repeatable process, right? And usually there is some sort of large event surrounding some sort of large project that goes under that does make things look even worse than they actually are if you sit back and take a deep breath and wait till 2024, right? It's going to be a rough stretch, and nobody actually knows how rough or for how long. Many of us have seen this show before. While there are variations, the crypto retrace cycle has repeated 4 or 5 times now. Each time the same behaviors crop up as crypto goes from mania of the month to whipping boy. The good news is the retreating tide also presents opportunities. But the thing is, people will continue to enjoy taking investor money, considering signals like Andreessen Horowitz's new $4.5 billion crypto investing fund, a decent amount of capital, may still be on offer even with public sentiment of crypto in the toilet. So you'll hear a lot of squirming and doublespeak like Manning's, as people who still want that sweet, sweet crypto cash try to downplay their actual crypto activities. Manning's evasion is a close cousin of the all-time great in this category. The argument for blockchain, not crypto. This is a meaningless concept because tokens with economic value are fundamental to the design of distributed public blockchains, at least for the moment. But rhetorically, blockchain, not crypto, is meant to signal that one wants all the cool parts of blockchain tech without the financial volatility. quote, blockchain, not crypto, end quote, has in previous downturns been a particularly attractive line for blockchain units within large corporations. Not coincidentally, one of actually executing on the hollow premise of enterprise blockchain is with tightly controlled private networks, which may have some limited long-term promise, but nothing remotely resembling the weird transformative implications of public blockchains. It's a rhetorical feint, meant to trick people who sway with the breeze of shifting sentiment and don't actually understand crypto at all. So here's living in the winter. Simply ignoring these craven contortionists is step one of thriving during a crypto winter. Another good move is to try and understand what happened. Why did Terra collapse? Why is Solana down 80%, but ETH only 58%? We talk about all of these on the channel. I think we've talked about both the Terra collapse and exactly why it collapsed. The algorithmic stablecoin problem and backing it with a token that's unproven. And then obviously trying to go into backing, of course, it with Bitcoin, but a little too late. And then we talk about, of course, Solana, and it's now gone down due to its consensus mechanism of proof of stake 11 to 12 times. We could maybe call this last time a 12th time. I think it was yesterday. We talked about it before, though, as well, with their, I think it was time clock off by 30 minutes as well, which, of course, you got to be careful whenever you hear like, oh, it's behind 30 minutes, but it doesn't really matter. No, it matters, especially within the world of technology. It matters. Don't believe them. There are actual reasons, and if you learn them now, you'll be better prepared when sentiment around crypto shifts in the other direction and the next wave of impulsive swing buyers arrives. Another simple to do thing, but one you might not want to hear, is stop day trading. Hey, I'm there, boys. I don't day trade. I don't know about y'all, but I don't do it. There is still downside out there, and no one knows where the market will bottom out. Secure whatever capital you've got left and shift focus elsewhere, specifically to participating communities, actively using products, developing skills, and maybe even building something. Day trading is a sucker's game, even in boom times. But during bear markets, it's truly something to leave to the professionals. Calling yourself a degen on Twitter is less fun when your formerly hilarious gambling addiction has left you actually destitute. Spending this time learning is a path towards not just minimal self-respect, also consider showering more, but actual success. Even a level 1 crypto speculator is learning a lot about the space. And at this point in the industry's growth, that knowledge will have value even during a crypto contraction. Prominent people in the industry will become a lot more accessible in the coming months as well. So you can really lay some groundwork for a future career move. But the most important tip for surviving the crypto backlash is very simple. Stick around. The sharply cyclical nature of crypto is its biggest annoyance and opportunity because it provides new entry points for the committed while regularly washing out I don't know that word. Let me go look at that one. Let's go do it. I'm a dummy, but let's go ahead and set a good example and learn, right? All right. How do we pronounce it, though? Play it for me. Dilettante? Dilettante. I like the UK pronunciation better, bro. I'm just going to say it. Dilettante is a person having a superficial interest in an art or a branch of knowledge. Oh, that makes sense. That totally makes sense. Dilettantes. Washing out the dilettantes. Whether you're a new hire at a crypto company wondering if it's time to ask Goldman Sachs for your job back, or an ambitious newcomer hoping for a break, the biggest mistake you can make is taking your eye off the ball. You never know which way it'll bounce. And I think this is a really good article for myself as well. If you've been following on Twitter, I am extremely stressed out about the farm. We are going to be talking about that this week. Some of the mistakes I made in this particular run. I definitely did a lot better than I did last run. So I'm going to go over the positives, like the things where I was successful and was able to capitalize properly. Some of the mistakes I've made that are going to make it a little difficult to get through a bear market, where I'm at as far as all that goes. And hopefully what that's going to do is provide everybody something to learn off of for the next super cycle. And that's my goal with this channel, is to just help you guys follow through, learn from my mistakes, hopefully, right? And go from there. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.